Hi everyone. Today I'm going to be demonstrating how easy it is to create and backtest virtually any 3-bar pattern that you may see on a chart. And when I say 3-bar pattern, I really mean multi-bar pattern. It can be 2, it can be 3, 4, 5, 7, 10, 12. Doesn't matter. It's very easy to do with quantum charts. Now I'm going to be going through a process with this today. So the video is going to be just a little bit longer, but what happened is I looked at a chart, I picked a 3-bar pattern, I began to play with it a little bit, didn't find anything, didn't uncover a profitable trading opportunity, so I made a few changes, and before you know it, sure enough, I uncovered a potentially profitable trading opportunity. And all in all, it took me, I would say, less than 5 minutes from start to finish once I looked at a pattern. And this is the great thing about quantum charts, is that you can come in here and you can have absolutely no idea what you want to do, and you can just look at a chart and say, okay, well, I wonder what would happen if this, that, and the other. And that's exactly what I did, and I'm going to show you that in the process with the exact pattern that I began this with the other day. So here I have the S&P daily bar chart. Again, my favorite market to trade, so it's one that I look at the most. Regardless, I was looking at this 3-bar pattern right here. And what I did was I started with, okay, here we have one bar where the close is less than the open, followed by a close is greater than the high, and followed by a close is less than the open. Okay, so I had two conditions that were the same, sandwiching a close that was higher than the previous high. That's what I looked at. And I could have done anything on this. I could have said, okay, the close is less than the open and the high is greater than the previous high. I can do that. Or I can say the close is less than the open and the low is greater than the previous low, and then followed by a close is greater than the previous high, etc., etc. So I can combine any of these, but the more conditions that you throw in there, the fewer number of occurrences. So you don't want to be too specific, because you'll knock it down to virtually no occurrences. So here's the first one. I clicked on that bar. I saw the close is less than the open condition. I stuck it into the strategy box just like that. Drag and drop. Now with this, all you have to do, that's the first bar. So each group refers to one bar. Okay, so the first bar must contain this condition. Once I establish that, I go to the next bar, and all I have to do is click on Add New Group. A new group appears. I click on this next bar that I want to take a look at. Close is greater than the high. I know where that is. I drag it in here. Now, this is a 2-bar pattern so far. And just like that, boom, we've created a 2-bar pattern. Now, the question is, do I want this to occur immediately after the first bar? Do I want this condition in the second bar to occur immediately, or can there be a certain amount of time in there? And that's what this within bars is for. So I'm going to change that to 1. That means that it must occur immediately after the first bar. Then I'm going to come to this third bar, and I'm going to click it. And I can either copy and paste this into another group. All I got to do is, to get that third bar, is click on Add Group, change that to 1. So now each one has to occur consecutively on the chart. I can either copy and paste that, or I can drag it over here again, and boom, I've just created a 3-bar pattern. And that's all I did. I click on Run, and it goes in and it highlights. Now you can see that bar 1, bar 2, and bar 3 are highlighted different colors, so you can see which bars are associated with which conditions. And when you have a multi-bar pattern, it becomes it's very handy to discern what's doing what. So now I've looked at, or it's highlighted every time that pattern has occurred, and you can see it occurs in different ways. It's not all exactly like this. You have a big up bar between the two. So on this one, regardless, I look at the report, 48% 52% up, 48% down. You know, there's a lot of occurrences there. This really didn't reveal any kind of significant opportunity, and there were a lot of occurrences, so there was room to work. So I went back and I said, okay, this bar is also an inside bar. So what if I add that into the scenario? So I scroll down here to the highs and the lows. These are all in order, so that it looks at the closes, then the opens, then the highs, and then the lows, and lists those conditions in that order. So I'm going to say the high is less than the previous high and the low is greater than the previous low. I'm going to drag those in. So now I have an inside bar that is required on this third bar. So I've added a couple of conditions to this. It was as simple as that. You click on run. It recalculates the occurrences. You can see there's not as many, and then you hit report, and lo and behold, just like that, I uncovered a 64% probability to the downside by an average of 7.77 points, 36% to the upside by an average of only 3.14 points. Now what this means is that one bar after the occurrence, the close was lower by more than 7.5 points 64% of the time. It was only higher 36% of the time by just over 3 points. So, you know, how long did it take me? Not very long at all, and boom, I just stumbled across something. Then I started to look at this, and I started saying, okay, well, what part of that pattern is really the core of this? And you saw that when I added the inside range conditions to this, that's really when this thing took off. So what I'm going to do is I'm just going to actually delete this entire group. So now I'm back to a 2-bar pattern, and I've deleted the first bar in this pattern. I said, okay, I'm not even going to look at this bar. I'm going to look at the closes greater than the previous high, followed by an inside range bar with the open or the close less than the low. So now I have a 2-bar pattern. I click on the run, and sure enough, it recreates the occurrences, and boom, now I have a new set of stats. Now, these set of stats are not as impressive as the other ones. However, look at how many more occurrences. So I've just increased the number of opportunities I have to get into the market with a potentially profitable situation. It's down 63% of the time by an average of almost 6.5 points. It's up only 37% of the time by an average of less than 4.5 points. So both of these stats are very good and very solid for a single day trade. And there you have it. There's the process. That's what it took. Those are the exact steps I started from scratch, not having any idea of what was going to happen, and I stumbled across something. You're going to experience the same thing over and over and over. And this is what I mean by I sit down at the computer with quantum charts, and rarely do I just start playing with it and not stumble across a potentially profitable opportunity. And I would have never been able to do this before. I would have never been able to just play until I find something, because it just costs too much to hire a programmer. If you are a programmer, you know, sometimes you're not going to get that kind of feedback even, and it takes time to program this stuff. So there you have it. I hope you enjoyed it. We have a lot more where this came from. You know, as much as I've shown you, I've only scratched the surface. So there will be more videos. I hope you enjoyed it. Thank you for your time. Oh, and by the way, please, if you would, I would absolutely love to hear from you. Please click on the survey link right below the videos that are on the website, and just take a few minutes and fill out that survey. I would love to see your thoughts, to hear your thoughts on on what you've witnessed and experienced. Thanks a lot.